Hey everybody, I wanted to bring you some insight into our software as a service research and some of the cost and investment challenges that some of the leaders in this space have faced. Now there's been a lot made of, over the past couple of years, the infrastructure as a service market, the level of investment to build out data centers, the tens of billions of dollars needed to fund those activities. And you saw the attrition over time for a lot of the providers that just couldn't keep pace with that level of investment. Now on the SaaS side, there's not as much coverage, but we see the same challenges emerging as some of the leading providers really look to build out their positions. If you look at them in a collection, there's been a tremendous amount of investment in acquisitions and also in R&D as some of the leaders have built out those portfolios. And as we'll show you, the short-term results from those have really not matched up from a revenue generation perspective. Part of the challenge is that this is such a long-term market in terms of how it's developed. It's still very immature from a customer perspective. The types of workloads that they feel comfortable migrating to cloud environments, the type of workloads that they have migrated, has really been a slow progress in terms of a lot of those markets. Whether it's financials or ERP, those big money workloads have not moved very quickly to cloud environments. And so these investments will take decades to produce results. What we wanted to do is show you some of the disparity between what's being put into these businesses and what's being generated so far. So first we'll look at Oracle. Oracle is a company that's built on acquisitions traditionally, and so it's no surprise that their strategy for SaaS is built on the same premise. You can see the level of their acquisition investments is staggering, well above some of the leading providers in the space. But to date, they've been struggling to execute and to get beyond inorganic growth from those purchases. The first year is great in terms of the increase in revenue. They've been struggling to both sustain those acquisitions as well as grow through their organic portfolio. Next, if we take a look at SAP, this is a company that we believe has made all the right moves in this space. They've been innovating up and down the stack, even circling back to CRM, a market that they had let Salesforce really come in and take out from under them in the cloud area, as well as funding a lot of acquisitions that have been solid additions to their portfolio. For them, the biggest inhibitor is the slow customer migration to ERP, a market that they own from the traditional space. They will be successful in this area over time. It's just a waiting game until customers are ready to make that move and SAP can start to capitalize from a revenue perspective. Lastly, if we take a look at Workday, this is a company that's had a much different strategy than Oracle and SAP, preferred to build their own products, starting with HCM, which has become very successful for them, really driving the overall company performance. But they've struggled to replicate that success with new offerings, whether it's financials, student, the forthcoming platform as a service business. Those are all areas where they've innovated, built a lot of the technology themselves, but just aren't getting the same rate of expansion that they need to build out that second viable leg of their stool from a financial perspective. So they've turned to acquisitions, the most notable being the $1.5 billion acquisition of Adaptive Insights. We expect them to continue to accelerate that side of their business, acquiring more companies to get them up to speed, grow the presence much more quickly than they'd be able to do with their own internal R&D and innovation. So that gives you a little bit of insight into the war of investment we see developing in the SaaS market. Look for more updates as these vendors close the year.